Hello Dairy Today viewers. On behalf of the Market Advisory Team here at Stewart Peterson, I'm Tom Mongobin, and this is your Dairy Week in Review for the week of January 11th, 2013. Take a look at our CME dairy components, mostly red this week as we saw negative action in the cheese trade with blocks down 4 cents, barrels down almost 5 cents. Butter was also lower this week, as was whey, non-fat dry milk held steady. Milk prices were sharply lower this week and really didn't see any positive momentum despite a declining dollar and a generally friendly USDA report that came out on Friday morning. Let's take a look at the changes on the week. As of the close on Friday, February down 79 cents to 17.61, March was down 71 cents, and the 2013 average was off 20 cents this week and closed at 18.22 on Friday afternoon. After climbing for 3 consecutive weeks, the block barrel average fell this week and ended up at 1.69625 on Friday morning. That is a decline of over 4 cents on the week. It is still possible that a base has formed right around here at the 170 level, as you could see from the chart, and those 3 weeks that we had prior to this of improving prices, but only time will tell if that base will hold. Here we have a chart of February milk, and this week's action reinforces the downward pressure and the downward trend we have seen on prices over the past 10 weeks. As you can see by the chart, the trend is now clearly down, but that type of movement has happened before, only to see a rebound. Here you can see here we had a sharp sell-off and moved higher. Here's another example of a sharp sell-off moving higher, and then here's another sell-off and it gradually moved higher over the next several months. So the price action going forward would be critical to see if we fall straight down from here or if this is one of those times where we break through that resistance level and head back higher. Over the latest week, cheese stocks increased 2.1 million pounds to 117.3 million pounds. This is the 4th consecutive week that the inventory levels have increased. We have not seen 4 straight weeks of rising inventory levels since July of 2012. However, even with the increase, the current level is still 15% lower than this level for the same week last year. Along with the report on the feed side of things this morning, we also saw an export report come out on the dairy side. Total dairy product exports for the month of November totaled just under 133,000 metric tons. This is the lowest amount so far in 2012 and the lowest amount reported since July of 2010. The total is also 11% lower than November of 2011. So definitely seeing some weakness on the exports. For the 2-week period starting December 24th and ending January 4th, the average Oceania cheddar price held steady at $1.81 per pound. This is the 3rd straight reporting period that the Oceania cheddar price has held steady at $1.81. The current block barrel average is at about an 11-cent discount, which is close to the 15-cent average discount we have seen over the past 6 years. The CME cheddar price has been at a discount to Oceania for 8 straight weeks now. Coming up on the week ahead, no major reports on either the milk or the feed side, but it will be important to watch the follow-through reaction as the report for the feed side came out on Friday at 11, so traders didn't have a ton of time to digest this information, so there could be some more fallout on the early part of next week. Grain prices had not settled as of this recording, but corn and wheat were up while soybeans were lower. That will do it for us. On behalf of the Market 360 Advisory Team here at Stewart Peterson, thanks for watching and have a great weekend.